Hello, and welcome to the first of the Arca Fireside Chats. I'm Rain Steinberg, CEO of Arca. Joining us from AIMA is Krol. Thanks for joining us today, Riji. How are you doing?
Doing great. How are you?
I'm fantastic. Looks like you're in a fantastic location. Where are you calling in from today?
I've been exiled to the islands of Croatia, so indeed slightly more exotic than my usual DC location.
Very good. I think we can all hope to be exiled to similarly delightful climes. So let's jump right in. What we've been talking about here at Arca, and we know you guys have been working on similar things, is we're calling it our Summer of ESG. And we just wanted to talk to you guys about that, hear your thoughts on it and your background and how you view ESG at AIMA.
Sure. So maybe stepping back and introducing AIMA a little bit, we are the Alternative Investment Management Association and represent as a trade body alternative asset managers, as the name indicates. Those would be primarily hedge funds, but also players in the illiquid space. And among the hedge fund group, we do have members like yourselves who are crypto native, but also members who are more traditional hedge funds, which is a bit of a misnomer, I suppose. But now with the new wave of crypto assets and digital assets and strategies, I guess hedge funds are a little bit more old-fashioned. And so hedge funds also from the traditional world who invest in digital assets and are now coming online with their strategies there. So really a place which looks at industry developments in terms of trying to help people institutionalize, and that's what we've been doing for the last 30 years, I think successfully so, and doing that now it feels all over again when it comes to digital assets. And by institutionalization, what we mean is really bringing whatever our members do in terms of strategies to the world that goes beyond private investors, high net worth individuals, to the world of pension funds, insurance companies, and so forth, making sure that obviously the regulatory understanding and frameworks are well developed for our members, making sure that our members have the right industry, some practice documents and resources to be able to respond to the demand of the institutional investor space, and also making sure that they're aware of some of the sort of most important market trends and are able to properly resource themselves and properly integrate them into their business. And the largest trend that we've been able to observe, and this is both on the investor side, but now increasingly on the regulatory side, is really move towards the integration of ESG risks into the investment process, which is much more explicit. It's always been there, but this is now becoming a sort of an explicit exercise, and development of new strategies, therefore, also that may be related to ESG issues, and being able to respond to investor preferences when it comes to ESG issues, which are developing again extremely rapidly and can be very challenging because investors do have different preferences, right? So our role there is really to educate our members on what the trends are, and try to simplify as much as possible by providing various tools to make sure that whatever processes can be standardized in a way, we can standardize by providing various templates and or various sort of standard approaches to things, so that things don't have to be done idiosyncratically all the time. So this is our background. When it comes to digital assets themselves, again, our approach is it's an investment as any other. It will have its ESG risks. It will also have ESG opportunities, and we see those very clearly, and are trying to make sure that the ESG debate has started to rage, primarily associated with Bitcoin and energy consumption, is much more sophisticated and actually looks at the space in a more holistic manner. So that's our goal. We are working on a number of initiatives in that space, and really trying to make sure that whoever comes to the digital asset space from the investor perspective as a sort of a direct investor and asset manager, as well as potentially sort of an asset owner, gets a good glimpse of what are the ESG issues from us as a trusted source with a good track record around sound practice and education for the last 30 years.
That's terrific. I think we're working on similar things here at Arca. We come of it obviously specifically from the digital assets perspective, since we're an asset manager just focused on digital assets. But we're similarly trying to bring some rigor, some standardization to these conversations. How are your constituents receiving this information, especially as it concerns digital assets? Is this message being well received, or is there demand for it, or is it still like ESG and digital assets? What's the general reception?
I think there is a necessity for us to be a voice, because we felt that there is a strange polarization coming out of some of the discussions, again related primarily to Bitcoin and or for type digital assets, and that has led us to really think about, wait a second, well, first of all, again, the universe is bigger than one or two tokens. Second of all, the discussion cannot be led in a very sort of polarized manner. There has to be sort of recognition of certain realities, as opposed to dismissal of concerns. And so the concerns do need to be addressed. And then, and third, then just broaden the lens and really start looking at the sort of discussion in all of its aspects. So the members are absolutely fired up for us to produce some work, and we are starting with a first paper that will look at one, the sort of the mechanisms that are used and the technology that is being used to sort of underpin the functioning of the various digital assets, and how those mechanisms then translate into the various the various ES and G components of the analysis that people will have to undertake, and really provide a sort of as balanced a view as possible to try to go through pros and cons when it comes to the sort of all the aspects of the ESG discussion. So, on the E side, obviously energy consumption and climate change related issues being top of the list. On the S side, the plethora of positive opportunities that are out there, but also the acceptance of the fact that there are there's huge volatility. There are issues around gamification of some of these things. There are issues around fraud and all that that will have to be borne in mind, as well as broader issues associated with evasion of basic social norms. Mm-hmm. And then on the G side, again, a wonderful sort of Cambrian explosion of new forms of organizing economic activity, which we find fascinating, but again, associated with downside of, how you actually manage that, and various issues that you have to either educate yourself as an end investor about, or find a trusted party like yourselves who are able to intermediate this and be able to provide the expertise so that you can navigate this sector in a safe manner.
Yeah, I bring up so many great points. I want to go back to something you said initially, contextualizing this asset class as more than just Bitcoin, right? There's tremendous diversity. There's all sorts of different types of assets. Bitcoin specifically is a cryptocurrency. Digital assets broadly have many use cases and a broadening use base. What do you think is the traction of ideas like that? Because we're having similar conversations, and we've been contextualizing this for a while, of creating a new taxonomy. We're trying not to say cryptocurrency. We're trying to classify them more around their functions. And we know taxonomy and the way we talk about things leads to like understanding. I think one of this like focuses on the E part of ESG, especially in crypto and Bitcoin, is part of the Bitcoin dominance of both like narrative. Where do you think sophisticated investors and AIMA constituents are in understanding kind of the broadness of this ecosystem?
So I'm able to answer that with a certain level of precision and confidence, because we just published a survey of traditional hedge fund managers asking precisely the question of what is the attraction for you in the digital asset space? Is it finding, an inflation hedge and a new digital gold kind of an asset? Is it finding an exposure to again a new form of value creation in the economic and social sphere? Is it just pure sort of access to something that is more volatile and something that you can trade and is more fun than the equity market, for example? And the resounding answer was, the second one I mentioned, which is the access to these new forms of economic value creation, which indicates to me that that people have registered, obviously the value of Bitcoin, and a lot of them will have, Bitcoin as an important part of their portfolio, but also looking at Bitcoin not only in its kind of digital for its digital gold aspect, and then looking at everything else as a sort of an entirely new universe for investment opportunities. So it seems to me that the hedge fund managers' view of digital asset space is a broad one, and for many, DeFi does come as a big one in terms of they understand the financial landscape. They understand very well the inefficiencies of that landscape, as well as the efficiencies.
Yep.
We can come to that in terms of what is still lacking, let's say, in the space of digital assets intermediation, and I think are looking at DeFi as one of those areas which are super interesting in terms of new opportunities for the transformation of the entire sector, right?
Yeah, and you said a very interesting thing at the when we were going through the different components of ESG, E, S, and G, and I think, like you said, a Cambrian explosion of ways to govern and organize economic activity, which is totally true, but Cambrian explosion also implies infinite options. How do you actually make these things practical? This is one of the areas we find incredibly fascinating. And why, in our campaign around ESG, especially in regards to digital assets, we're saying more GSE, because when you think about the actual value proposition of blockchain and digital assets, it is about a new way of making decisions in a decentralized manner. It is messy, it is hard to organize, but that is kind of the idea. And that's also the idea behind Bitcoin. It's the G part, it's the decentralization of, the control of it. That's what it's about. And we're finding, as we look, incredible opportunities around governance. Have you been following at all what our CIO has been doing in a protocol called Sushi at the moment? Have you seen any of this?
Yes, we have, and well, we've talked about it with your colleagues in terms of the proposals to improve the treasury management of the protocol and finding better ways to do it than was initially proposed as a way of conducting a sort of a digital asset activism of sorts.
Yes.
And that's again the hedge fund industry has been at the forefront of
Yes.
involvement for years, and in many instances, we've been fighting various policy battles to make sure the investor voice is heard. And corporate governance, the way it's set up in a number of jurisdictions, basically tends to favor the incumbent, management and the board,
Yeah.
and tends to oftentimes disenfranchise the end investor, which is a problem, because in the end, what happens is you have a very sort of underperforming economic system, and there's quite a lot of academic research around that. But unfortunately, again, the corporate structures tend to be fixed and very slow moving.
Yes.
And so what you have here is this, it's kind of a more purified form of the ability to intervene and almost be the board as and when is required, if you are a token holder, and being able to communicate directly with your fellow token holders and investors is a wonderful opportunity, I think, for anybody who's looking at this space. So I mean, I'm not exactly, I don't know the details of what
No,
you guys
you got it. That's all.
highlight
That's
that
all
for
you
yourself.
had to really get was this was something, a decision that was being made in a decentralized protocol, that it was unclear how it was being organized. The discussion was going on in a forum for all sushi holders, and people that would lock sushi and X sushi could vote on this. And just through the almost really democratic and engagement process and the power of ideas, different ideas were kicked around in a really amazing way that I had never really seen before. And it was still very, very collaborative. Often in, we'll say activist situations, there becomes a hostile situation between a management proposal and then something that would be seen as shareholder beneficial. This never got that. Even the team from Sushi that initially presented the one that was seen as not management, not community friendly, they wanted better solutions too. And it was more a function of less experience in capital markets, really, I think, than any sort of enrichment or otherwise. And it was just fascinating to see how, when you got the people, we have excellent capital markets experience under Jeff, and then they have a tremendous technology, and VCs bring what they bring to the table, but these aren't areas that necessarily overlap. And that's what we're finding in digital assets. It's bringing these skill sets together that aren't necessarily always in the same box. There's usually some pretty defined walls and fences around them, but this technology blurs them. So it really encourages a really community approach that you don't always get. And so I've been just thrilled at the good-hearted engagement over all of this, and honestly trying to work towards a good solution for everybody. And I think it'll start to be a model for governance in these decentralized protocols. I want to posit this. We started this fund back in August of 18, and the idea was always to create an institutional grade product. So very much aligned with your constituents, like you say, beyond high net worth, into the pension endowment world. And they need certain things to get involved in an asset class, in a space. And it's not just returns or the performance of it, it's a narrative, where does it fill, and things like that. What I found one of the most interesting things since launching our governance campaign is that it has engaged folks from that world, the pension and endowment world, who are very interested in ESG components, but had not really thought of digital assets in that way outside of, I think, the very narrow lens of E around Bitcoin. But the governance and social side has been way more interesting to them on getting exposure to a novel area of that than even the digital asset component. Have you seen similar things, or what have you seen?
Yeah, I think so. Again, I mean, let's get this to the E side out of the
Yes.
Out of the picture here. I think people have to understand that there will be, to the extent that there is energy consumption associated with certain activity, which is perceived to be new and not necessarily well understood, there's likely to be, detractors of that no matter what. And
Yep.
I think that's natural, that's okay.
Yep.
I would liken it to, for example, short selling. There are a number of investors who will view short selling in a particular way, and even though short selling can be used in a beneficial manner when it comes to ESG. So, for example, people are using regulation openly to say we want to move activity away from, say, carbon producing activities.
Yep.
Right? That's the idea of sustainable finance initiatives in Europe, for example. Well, if you think about it, short selling is the surest way of taking capital away from those kind of activities. But there will be investors who will not want to benefit from short selling in any way, and exposure, even if it's a short exposure to let's say a carbon intensive industry.
Yeah.
And so you have to accept that, and I think the industry will have to understand that there's just certain parameters of the discussion that are just unhelpful.
Yep.
If you have a moral issue around short selling, then short selling of a carbon intensive industry is still not going to be something that's going to win the day. And so the real discussion needs to be had around, indeed, the mix of energy that supports Bitcoins and other proof of work concepts, and the sort of the desire to move and understand and communicate how the mining industries is mindful of those issues, and sort of desire to move to the renewable space. And then the opportunity side of things, again, very much like the sort of the short selling of carbon intensive stuff is well, how can Bitcoin mining, other sort of POW technologies can be used to incentivize more renewables production. And I think that is an interesting debate. But there's always going to be something or a set of investors that they're going to have an intrinsically negative view of any kind of asset that somehow incentivizes production of carbon, one way or another, directly or indirectly. And that's fine. And we have
Absolutely.
we have the same discussion around other producers of energy, whether they're old companies. Some people say divest entirely, some people say no, let's change the mix, right? Yeah. Let's engage, let's do this and that. There will be a diversity of views always, and I think people in the industry, the Bitcoiners out there, just need to relax a little bit more and not treat this debate as something which is somehow attacking the fundamentals of reality, and feeling a little too touchy-feely about it.
I want to address that. I couldn't agree more, because this is what makes a market of ideas, is an honest exchange of ideas, and it takes a broad view on investments, and this is good and this is healthy. And that's really what we're trying to engage in all of our stuff. We don't have an ESG offering, and we make no claims about ESG of this space in any sense. The only thing we're trying to encourage, which I think is similar to what you guys are doing, is we're encouraging our investors and people that are actually looking for ESG opportunities to actually weigh them, how to weigh them, what goes into them, that there are probably very interesting and dynamic aspects to this, like the clean energy forward part of Bitcoin, the very large, gross energy use of something that's that's not well understood and very young. How do you balance that type of thing? How do you weigh energy against its ultimate value proposition at the end of the day? These are nuanced arguments, and good-hearted, well-meaning, thoughtful people can be on, diametrically opposed on these things, and it's totally fine. And I think what you point out, and I hope somebody from our space watches this, and I think this is also a part of us just being a very young industry in digital assets that also came from very, not young people, but just it's brand new. They're kind of like pioneers in this, and it's been a very much like a rogue, against the establishment type of experiment from the beginning. And that this is when you're growing up and there's more types of people looking at it, you actually have to grow up a little bit with that too. And a diversity of opinion on these things is good. And these type of like people that are talking about these things, it's not against Bitcoin in that manner. These are completely valid topics that need to be explored. So I'm really glad you pointed that out. I couldn't agree more.
It's ultimately it will be a political debate, and the industry will have to live in the political world. Because on the other hand, there will be some people, and there are some people who want to misuse this, the fact that there is a focus on climate change to get at Bitcoin and other coins for using that kind of stick because it's a convenient stick that sort of policymakers will listen to, and that will not need to be countenanced. But again, as you said, in a nuanced way and an honest debate about the sort of the merits of this. So I think that the E side of things has to be properly discussed, and there has to be lots of transparency around that. And I think the industry is now just merging with the various initiatives around like green mining and stuff like that, where again people will have a sort of a nice set of choices as to how they want to engage with that particular issue, whether it is going to be around, okay, well, I will only buy a sort of a green coin that's certified to be mined by renewables, and that's how I deal with it, or I will completely be out of it because again, I don't want to support in any possible way this kind of ecosystem, because there was always going to be somebody who's bringing old coal-fired power plant to life just to mine a few of these coins. So there just needs to be a proper, well, transparent discussion, and just an understanding that it's of huge interest. I mean, climate is of huge interest, and it's the one issue that our investors tell us goes beyond financial considerations when they look at ESG. That's something that I'd like to highlight. There's two. One is climate. The other one is diversity and inclusion. Those two considerations are considerations where the end investors are willing to go beyond financial risk as the driver of their sort of ESG thinking, whether it is in terms of foregoing returns and by sort of eschewing and shunning certain sort of investment opportunities, or in terms of just the extra focus that they give to either the or managers who are managing those investments when looking at those ESG issues. So it's a super important area, but at the same time, I think it's quite manageable. Because again, the sophistication is pretty big, and all it takes is really sort of an adult approach to the issue. And again, I see that developing and evolving. When we go to the other side of things in the S&G, as you've prompted to me initially, I feel that the governance piece is indeed something that's quite liberating, in that you just don't have the same level of flexibility and the same level of freedom in other governance systems that exist out there in terms of corporate structures and other legal forms that are used for economic activity. It will be interesting to see, or what I think is where the financial markets participants can be helpful, and that's alluding back to your sort of sushi swap example, is what we see as there is a lack of sophistication in terms of how people want to kind of innovate. A lot of the times the innovation is incapable of foreseeing the outcomes of the innovation, right? Because ex ante, it's difficult to predict, for example, how concentrated your token base is going to be, or what are going to be the various sort of incentives, impacts in terms of how they interplay and so forth. And also there is again excessive focus on sort of delivery of a certain product, service, and maybe a little bit of a sort of a lacuna or a blindness around some of the basic things, like you said, the treasury management, or how things are done elsewhere, where you don't have to actually reinvent the wheel, and where you can easily learn from existing practices, and have the traditional financial markets actually provide a sort of useful feedback to the world of digital assets and their governance, right? Because again, there has been there's just a lot of experience there that's capable of being mobilized, and an easier way of getting that experience across, right?
We are in agreement there. I'm going to close with this. What do you think is in digital assets and ESG in this discussion? What are you most excited about in this area from where you sit at EMA?
I find the sort of the most promising part around the ability to disintermediate in a radical way various services that exist out there. I don't think, and this is a big challenge as well, right? Because sometimes you see projects which are sort of solutions in search of a problem, and sometimes you see again a focus on solving a particular issue without necessarily understanding how that particular issue is embedded in broader context. And so, just saying like, oh, great, I'll have a wonderful system of creating an exchange for something, without understanding, well, but how do people access that kind of exchange? How does that sort of exchange exist in the regulatory context and meet the various sort of regulatory criteria so it can be adopted more broadly by people? That is the sort of the constraint that the people are facing. And what is amazing is to see how quickly the digital asset space actually reacts to that. And so that how quickly you've got solutions focusing on interoperability, solutions on like importing data into the various projects, which are sort of independent but reacting to the sort of the downside of focusing on just one solution, which kind of takes you away from the overall context. And this simultaneous co-evolutionary development is something that I find super exciting. It's uncoordinated, and you see an amazing outflow of sort of talented individuals that are coming into this from the tech space, from the financial services space, that fills me with a lot of confidence when people are talking about like, oh, this has no future, this has no um, value, to speak of. I just like, it's just impossible that a group of people that is kind of swelling by the day, composed of super intelligent individuals, is going to create something that is of little to no value to society. I mean, that sounds rather strange to me. And so that's what I find super exciting is that somehow, in an age of cynicism, in an age of disillusionment with political and social institutions, we found a way of energizing people to try to find creative solutions for for a lot of society's problems.
I couldn't agree more. And it's fascinating to me too. And like you say, I think the key that people have to really realize is we're coming from a very centralized command and control world, and we're watching kind of the evolution, and that word I think is very appropriate here, of decision-making process in a decentralized way. But there's no roadmap for this. It hasn't been done before. There's no way to predict it. It kind of has to evolve in an evolutionary path, where it's going to sometimes go down dead ends. And to think that this whole thing is really only a little more than 10 years old. And some of the things that have grown up in this space, it's incredibly interesting. And I'm like you, it's at this point, the idea that this entire thing is of no value seems to be one of the outcomes that of a more and more unlikely nature with the type of brain power, the type of effort, even the early results that you're getting. Where can people that are interested in what AIMA is doing just generally and ESG go for more information?
So AIMA.org is the website. There's a lot of material that is actually publicly available, a lot of our research out there. We've done a lot of work on ESG and alternative strategies that are, again, freely available, that people can read up on. And as I said, produced a recent survey of both the sort of conducted with PwC and Elwood on the sort of native crypto asset management world, but also traditional hedge fund world. So that's out there on the website, and I would recommend people look at that. And as I said, soon we'll be publishing a paper, publication date sort of mid-October, that looks at sort of ESG and digital assets in particular, and that should be sort of fairly detailed. As I said, helping investors understand the two sides of the ESG coin for all types of digital assets. And to give you guys a plug, your paper on the same topic has served as an inspiration in terms of just understanding how you classify that entire digital asset space, as there are multiple sort of attempts to do that, whether it is in the industry or regulation. And so we find your approach particularly helpful, and we'll be following that, and then delving deep into the pros and cons of all those different types of digital assets. So we'll, as I said, hopefully allow investors to start engaging with the digital asset space from the ESG angle by incorporating that into some of the other disciplines that we've developed around ESG, and kind of integrate digital assets in that broader conversation.
Well, thank you so much for the kind words. I think we're incredibly aligned on just wanting to give both our LPs, anybody that looks at our content, just hopefully interesting, engaging information that we really want to promote thoughtful engagement with this. It's just not a topic that you can just have a black or white view just very casually. You can, but you're probably not going to be well served by it. So we commend you for your nuanced approach, and thanks for that.
And above all, it's not a topic that is ever going to go away. It's something that's intensifying by the day. Anybody who's serious about understanding the institutional investor space has to be serious about ESG. So
Yes.
you know, it's time to roll up our sleeves and really dig deep into the topic in all sorts of ways. Digital assets for us is one of those sort of tough ones. Derivatives is an incredibly tough one for us as well. But that is the challenge. Oftentimes is the ESG tends to be perceived from the experience of long only equity investors, and a lot of the times there's a lack of understanding of other more sophisticated spaces, and so
Right.
we like to take
That
on the
also have
challenge
a
and
very
take
big
them on.
ESG component. We thank you for that. Thank you for joining us today, Riji. I look forward to checking out that survey and all of your material over at AMA.
Excellent. Thank you.